Hello, welcome back to another video analysis. And I hope you are a subscriber of this channel or you are a follower so that anytime next I drop a content, you are not going to miss it. And today is 16th of March 2025. Last week, 10th of March, I dropped an analysis across my social media handles, YouTube, TikTok, Twitter, and Facebook. And I also dropped this analysis. I also made this analysis on dollar index, stating that I am bullish on dollar index. And I also dropped the analysis on gold, which we are going to review in a bit. And we are successfully able to catch 120 pips on gold, and that was a very massive trade. So let's start with dollar index. And I called this bottom on September 2024. I also called another low on July 2023. If you check my YouTube channel, all the analysis are there. And for today, we are starting from the weekly outlook. And this is the weekly chart because we want to see the bigger picture. And as I mentioned that I'm still very bullish on dollar index. And this is where we accumulate for a very long period of time. And we have this manipulation, expansion to break this bullish structure. First mitigation of this fair value gap while the market leaving this fair value gap as breakaway gap. We have multiple liquidities at the top, but overall picture, we are expecting the market to reach for 114 on dollar index. So this large down candle that took this sell side liquidity is the whole movement right from this top, which was formed on January 2025, down to this area. The market retrace is considered as a deep correction because anytime we have accumulation, manipulation, when we have expansion, we are to expect retracement before continuation. And you can see how market drop back into this level, this weekly fair value gap. We have this sell side liquidity that was taken last week as expected. So now, when we look at this candle, the nature of how this candle closed, you can see that we close with a sign that the market is going to reject on this fair value gap, and we are going to see the next weekly candle closing above the previous week candle, at least closing in between this large sell side imbalance on dollar index. So on dollar index from weekly, I'm very bullish, and the nearest draw on liquidity is this relative equal highs, this high that was formed on February and this high that was formed on first week of March. So we have relative equal highs around 107. This is the nearest draw on liquidity I can expect to see the market pushing to. And then we have this high around 109. And then we have this draw on liquidity. This is the short-term draw on liquidity. And this is the long-term draw on liquidity, 114 on dollar index. So that is that on weekly. When we take a look at the daily, we can start to see market cooperating with what we saw from the weekly, right? What I mean by cooperating is sign of the bulls, and these are sign of the bulls. Take a look and study how the candles closes within this fair value gap. You can also refine this fair value gap on the daily, and we have this reaction, just weeks closing inside the PDRA. The next candle, an off candle, another off candle closing above this high. So now, one more thing we need to see before we can actually start jumping in with the buys is to see an actual break of market structure on the high time frame. And in this case, we can consider daily and 4 hour as our high time frame. So if we can have bullish break of structure on 4 hour, a very obvious break of structure on 4 hour, and then that is going to be our final green light for us to start engaging with the buys on dollar index. And we already know dollar index is negatively correlated to GBPUSD and Euro USD. That being said, we are expecting sell to happen on GBPUSD and as well Euro USD. And looking at the price action on GBPUSD, you can see we have this high, even though I'm not trading GBPUSD, but for explanation's sake, I have to mention that. And you can see we have this fair value gap that failed, which now turned into inversion, and we can see the weekly candle how it closes into the inversion. So on GBPUSD as well, we can expect movement down to this nearest draw on liquidity. We have another sell side and we have short-term low, and we have the long-term low underneath. And you can see we have a bunch of sell side liquidities, trend line phantom. So this is what I have on dollar index. And now let's go to Nasdaq. Let's go to Nasdaq. I have shared perfect entries on Nasdaq. Not so perfect, but banger trades on Nasdaq this week. I've shared a lot, especially to my inner cycle, to the Nasara Elite. Everyone that is inside Nasara Elite or my student can attest to that. I've shared a bunch of setups, and I think we have 5 setups, 5 trades, and 4 of which are successful trade that happens to take profit. So now you can see on Nasdaq, we're having this drop. Nasdaq, the order flow on Nasdaq is very, very bullish. If you don't know how I arrived at the bullish order flow, please kindly go back to the previous analysis I drop on this YouTube channel. And you can see we have this large down candle. This is a bearish, this is a bullish order block. And what do you have over here? You have a fair value gap, isn't it? You have a fair value gap and you have a bullish order block. So for me, since the order flow is still bullish, and I can say this is just a deep retracement, market taking this sell side liquidities, bunch of sell side liquidities, and now we are currently sitting into this very strong key level, a fair value gap on weekly and a bearish and a bullish order block. But above all, we need to, as I mentioned, watching the previous analysis I did, I'm very bullish. Still on this week, I'm very bullish on Nasdaq. And when we take a look at the commitment of traders report, you can see the commitment of traders report on Nasdaq. Uh, for this week, non-commercials are on long position, while the commercials are on short position. So for me, this is like another confluence that is solidifying my expectation on Nasdaq, bullish expectation. So I'm very bullish on Nasdaq, and that is weekly time frame. Looking at the daily time frame, you can see we have more information on the daily, because anytime you come down to a lower time frame, you get to have more information. You see, we have this information on daily, right? We have a bit more information on daily, and this is a daily fair value gap, daily buy side imbalance, and we can see how market reacted within this daily key level. Market reacted perfectly within this daily key level. And we have this fair value gap on the daily, that is on Nasdaq, right? We have this fair value gap. That is a bearish fair value gap, which now I'm expecting it to be an inversion. What I mean by inversion is following the order flow, the weekly expansion, and the daily bias. I want to see market pushing off and closing above this bearish fair value gap, and then making this bearish fair value gap to turn into bullish fair value gap. And then from there is another confluence, in as much as we close this above this fair value gap, and then we have our inversion, and then we continue buying. And this should not be break of structure. It had been long I put this. This should be a draw on liquidity. So this is your next draw on liquidity. We are going to continue buying Nasdaq, and this should serve as our next draw on liquidity. Another buy side imbalance, and then we have 22,243 as our long-term target on Nasdaq. And that is that for Nasdaq. And you have seen how the commitment of traders report is in support of that. I'm not going to share a seasonal tendency with you, because it will feel illegal at this point to be giving everything 100% for free, where if you go to other platforms, other channels, other mentors, you need to pay. So this is gold, and I believe from my previous analysis, now your eyes are opened. You learned something very, very important from my recent analysis on gold, and you know how we call this high, and it delivered with over 1,000 plus pips because I took an entry buy from previous 2 weeks and we got over 1,200 pips. So this is that daily inversion fair value graph of last week. And if you are within my inner cycle, like my February, March student, I told them that I'm expecting a market to drop and take this sell side liquidity and take previous day's low. Previous day's low was formed on Tuesday, the 4th for last week, previous week low, I mean, and then we have the push that took previous week low, and then this is the previous day's high. Previous day's high was smashed on 12th of March, and we have market taking out the all-time high and forming another all-time high at 3,000. I know somebody will think, is there no juju in this analysis? Because I call this 3,000 with precision ever since price was around $25,000 if you check the previous analysis on my channel. And that is exactly what happened. We now have $3,000 for us on gold. I mean, gold, sorry, not dollar. We have $3,000 for us. So what is next? I know that is going to be the next question. We have attained 3,000 on dollar. So I'm going to remove these annotations because we don't need it. Anytime you made a target, if not for the sake of explanation, I wouldn't have been keeping lots of annotations on my chart, because few lines you understand where the market is going, you mark out your key levels and you take action immediately. So this is our 3,000 for us. And then you can see we have bunch of imbalance. We have this imbalance and we have this imbalance. So now if you are to ask me where do I think gold is going next, for now I don't know where gold is going next. I need to sit down, let the market breathe, because we just set a new all-time high, and this new all-time high is what? 3,005. This is our new ATH. So when the market is at new all-time high, the market is at very, very premium level. And even though the market is at very premium level, taking a sell opportunity, thinking of retracement, like rushing to take a retracement, you can be caught off guard, and that is going to be very dangerous at times. So it's better for you to wait to, gather more market feedback fundamentally and, with the macro perspective and technically before you engage. So for me, I don't think we are going to sell or we are going to buy. In this case scenario, I am 50-50. Anytime I'm 50-50, like having mixed of bias, what I do is I either approach the market mechanically without conferring or considering the high time frame bias, or I sit sidelines on my hands without engaging the market at all. That is what I do. And at this very situation, I'm going to sit at the sideline. I'm not going to engage gold, especially discretionary. Even if I'm to engage, I'm going to engage it mechanically. So that is the analysis for this week. I hope you learn again. And if you missed the previous analysis, kindly do yourself a favor, go back and watch those previous analyses.